morning, you're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. BSP Governor Ben Diokno says mass vaccination will be key to the country's recovery, which the agency expects to start in 2022. Diokno says the rate with which the Philippines can bounce back to pre-pandemic levels is based on how fast the government distributes the vaccines. For now, the BSP chief said the government should prioritize creating jobs, noting that the BSP's recent business expectation survey showed companies were optimistic and were eyeing to expand hiring in the coming months. Meanwhile, Nomura substantially cut its 2021 growth forecast for the country to 5.4%. From 6.8%. This implied that pre-pandemic output will be seen only in the third quarter of 2022 versus its earlier estimate that it will be achieved by the second quarter, which was already lagging in the region. Nomura cited new lockdowns amid the muted fiscal and monetary support, along with a slow vaccine rollout, suggests that recovery will lag further behind. On the other hand, UK-based Pantheon Macroeconomics warns that any near-term recovery might be short-lived before the country circles back to another recession. The think tank says a double-dip recession may prove inevitable for the Philippines as the reimposition of stricter lockdown measures still failed to bring down infections in the country. Pantheon estimates the first quarter GDP to grow by 2.2%, only to contract again by 1.5% in the second quarter. U.S. markets were back at near record highs, with investors looking forward to corporate earnings season over there. Inflation in the U.S. comes up today. Most analysts are expecting a significant uptick and eventually an interest rate adjustment from the Fed. Elsewhere, you've got oil edging up, Bitcoin nearing an all-time high before a listing by the largest U.S. cryptocurrency exchange. Let's take a quick peek at Asia Pacific, though that does seem little changed when I checked in earlier this morning. But you can see the Nikkei 225 edging up by 0.7%, together with Taiwan's TAIEX up by 0.4%. I did want to show this new chart that Bloomberg has of the COVID-19 vaccinations worldwide. You can see that more than 16 million doses already released worldwide. Now, just as a vaccine update, India has taken the second spot here, overtaking Brazil, the country now with the second most cases in the world. Meanwhile, over in the UK, they've hit their goal of offering a shot to everyone above 50 years old 3 days earlier, and England has now reopened shops, pub gardens, gyms, and even hair salons over there after months of a lockdown. Meanwhile, back here in the Philippines, we are now asking the U.S. for vaccine help. That's as the China tensions grows. This comes as the Philippines will now restart military drills with the U.S. On Monday, there are more than 1,000 Filipino soldiers and 700 military personnel from the U.S. participating in those drills. So Defense Secretary Delfin Lorenzana took the opportunity actually to ask U.S. Defense Secretary Lloyd Austin to expedite the delivery of Moderna vaccines that we have ordered. Recall that we are expecting the first shipments of Moderna from next month. The government and private companies have purchased 20 million doses from Moderna. Right now, we only do have Sinovac. That's most of the supply. That's 2.5 million doses already, and another 3 million expected through May. Now, let's take a quick peek at how markets have opened this morning, hovering just above 6,500 levels here. A bit of a pullback again, down 0.2%. This comes as we declined yesterday. Investors continuing to remain cautious amid the continued surge in COVID-19 cases, as well as the lockdowns. This from COL Financials. One is Barredo. Lack of daily volume. We had less than 5 billion pesos of trades yesterday, and that could be a continuing factor that could contribute to the market's listlessness. So sideways trading expected for the rest of the week. It's been bad, but it could have been worse. That was the tone of Leechiu Property Investments' first quarter property briefing. And we have with us on the show CEO David Leechiu to know what exactly he means by this. Good morning, David, and welcome to the broadcast.
Hey, good morning, Danie. Thanks for having me again.
David, you're one of the ones, remaining, let's say, saying that everything was better than expected last year. You have some bright spots here to show. First quarter office demand, for instance, much better than fourth quarter of 2020. That was up by 22% year on year. But you did mention still down 31% year on year. But that was, as you mentioned, better than could have been expected. The question now is, David, this came as investors were hoping for an economic recovery underway. Lockdowns seem to have been a thing of the past, but now the reality is back on the ground here. Will these figures of the first quarter be sustained throughout 2021?
Yeah. So I think there's a mismatch between the vaccine program and the spike in cases and the time that you opened the economy. Because I mean, remember when we started opening the economy all the way up to where we led today, we were internally in our business computing that maybe we'll hit 1 million cases by December, January, because at that time in October we were already hitting 3,000 cases. But we said that by that time the vaccines would be meaningfully here. But then because it could have been meaningfully here, but it wasn't because of some unexplainable circumstances that's happened behind the curtain, we are where we are. And then and so I think a big chunk of the concerns that we've had could have been addressed had the vaccines been here, as it has been in many other countries, right? So I think now that the at least the most recent report that we've seen with the IATF, they are hoping that there will be 20 million doses arriving onshore every month beginning August. So they're hoping that there will be 140 million doses, so that's 70 million people, and that's about 50% of the population. So that will have a dramatic impact on the movement of the economy. And as Secretary Diokno said earlier, it really is dependent. And what are we going to do about the mutations and all the 5, 6, 7, 20 versions of this virus that will emerge in the next few months? Well, I'm optimistic that the pharma companies will be able to sort that out, as they have with certain flus, where they have one shot for 5, one shot for 6, and they'll probably do the same thing sometime around the third or fourth quarter of this year. So um, while things are dire and things could be much much worse, actually, the property market in general is holding up pretty well. And just like what the first 12 months have shown us, property is one of the best places to hold. So one of the so I've been criticized for being optimistic, but really there's a bigger group of people that has been optimistic, and that's the stock market. And if you look at the stock market from 8,000, we're down by just about 20%, right? And we had a point when we were down 75%, and that was just for a few weeks. And today we're 20% down from 8,000. We are 27% down from 9,000, the all-time high 3 years ago. So it's we are not the only person who sees the opportunity here, and we are not the only people in this market who are saying that things will turn out okay. Now, I totally agree. It is all about job creation. The fastest way out of this is to get more jobs created, which is why we keep highlighting the jobs created in the BPO sector. And what we have to do as a people is to do everything we can to make sure that we facilitate that growth. And the Pogo sector, one of the fastest growing employers in the Philippines, they went from 200,000 square meters to 1.7 million square meters at the peak. And when we needed them to keep employing people, we decided to kind of trip them over with tax. And that's why they shed 20% of their footprint in the Philippines. And we're lucky that they only cut down 20%, because they could have culled more and moved more jobs out of the Philippines, but they haven't, because frankly, there's nowhere to put them, right?
David,
So,
can we talk
Yeah.
about you already mentioned, sorry to interrupt you, but you've mentioned that there are, of course, they're still waiting for the vaccine rollout, and a lot hinges on that, whether we're going to move from the work from home back into the office spaces. But let's talk about the changing trends, the lockdown trends, so to speak, because in your report, the main thing that came out was that e-commerce has increased double digits when it comes to office spaces. Can you nuance this exactly? What do you mean by this? Are these the Shoppies and Lazadas of the world taking up more space? Are these new companies that have decided to venture into that space that weren't there before? Or are these the physical retail outlets now, adapting the malls, so to speak, changing into warehouses? And what do these trends imply?
So so these are predominantly the big online retail operations like Lazada and Zalora and Shopee, etc. There are very few new players in this market. But what the existing big players are doing is expanding their girth and their presence in the Philippines. They do have a world domination program to decimate brick and mortar retail and convert everything online. And of course, some of the big retailers, the brick and mortar retailers, are riding on back of some of these companies just in case they're right. And so today, with the emergence of online retail, the brick and mortar is very much behind these companies today. How long that's going to last, I think, as soon as we're allowed to open, the middle class and below will keep repopulating the malls, and the high end
Mm-hmm.
market will continue to shop at a much slower pace. And like we said, early days of this crisis, we might have built too much office space today because of, and that's only as a result of future growth, because we're anticipating the per capita income of the Philippines to keep growing and doubling in the next 15 years, right? So from 3,000 today, we hope to make it somewhere at $5,000 to $6,000 per capita 15 years from now. That will produce a whole new population of wealth that will go to the malls. And that's what we were preparing for. This crisis put a dampener on demand, but that's going to change as soon as we're allowed out again.
Okay. And finally, David, before we let you go, just a quick question on the residential sector. I did ask this yesterday, and I think it's very important for our viewers to understand the relationship between the non performing loans. To what extent are developers feeling the pinch of, even pre selling, or condo owners not able to pay their loans in 2020? And has this been reversed, especially with the Banco Central now easing the interest rates?
Yeah, so I think the middle class and below, that market has been very hard hit by this crisis, and so they're the ones who are giving up and defaulting on their loans. The government stepped in and said, banks don't foreclose for 12 months, and that's expiring in the next few months. So I do expect foreclosures to climb. The values will be lower, but the volume will be higher, right? So, for example, one house in Dasma or Forbes is now a billion pesos, 700 million to a billion pesos. That's a number of very small units in the middle end market. That's like tens, if not hundreds, of units in the mid end market. So, I do think that they're going to be hit hard. It's going to be bad for the middle and below, as we've said many times before. But as soon as jobs are created again, restaurants are able to open, malls are able to open, then that's going to elevate the suffering of the middle class and below. So that recover. Having said that, I do think that as soon as the vaccines are on board, then you're going to see a velocity kick up in the mid and lower middle. The upper end and the luxury have continued to acquire, and rents in many cases have fallen between 5% to as much as 30% in the Bay, and yet capital values continue to hold more or less at around -1 to -5%. In some cases, even unaffected at all. So, in limited cases, they have tripled in just 12 to 14 months. So it shows you that people who are able to save and invest in real estate are holding, and that it's proving to be one of the better places to hold money. So and once we get out of this crisis, we should be we, we should be reaping a lot of benefits from holding property today.
Okay,
Um,
so
yeah.
liquidity is still intact, and also the higher luxury segments proving to be very resilient there. Thank you so much, David. Sorry, we don't have enough time for more questions, but very much appreciate your time with us this morning. David Leechiu, CEO of LPC.
Thanks, Danny. Bye.
Checking in on the other headlines, we're keeping our eyes on House Ways and Means Committee Chairman Joey Salceda reveals that the proposed Bayanihan to Arise as One Act will be put together without exceeding the caps on the budget deficit. Salceda says Congress is now working with economic managers and the Finance Department to find deficit-neutral ways to fund Bayanihan 3. To do this, the lawmaker is proposing to temporarily increase the minimum dividend to be paid by GOCCs to 75% from 50% via an amendment to RA 7656. He also emphasized the need to immediately pass proposed measures to tax Isabong and Pogos to fund that measure. The third Bayanihan bill aims to support economic recovery as the pandemic remains uncontained. This will translate to funding more cash aid to the affected households. Infrastructure spending snapped a 6-month losing streak in February, this as the implementation of projects under the second stimulus package kicked in. Latest data from the Budget Department show that infrastructure and other capital outlays jumped by over 23% year on year to about 56 billion pesos in February. That was 9.4% higher than the amount spent in January. DBM adds that this has brought total infrastructure spending to more than 107 billion pesos for the first 2 months of the year. The department attributed the bigger spending to payments made by the DPWH for completed infrastructure projects that started last year. That is on top of mobilization costs for road widening, rehabilitation, and flood control projects that will be rolled out this year. Recall that the government has allocated 1.2 trillion pesos for infrastructure projects this year to fuel economic growth and help complete the big ticket projects before the end of the Duterte administration. That's the first look into the business day. Today is Tuesday, April 13th, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. Today, I'm Danie Laurel. Mask on, wash hands, and stay safe, Philippines. We are One News.